And so if some of these major central bankers around the world who have a pretty good idea of what's coming and where we are, if they're moving some money every month out of their dollar reserves into physical gold, well, why wouldn't that be a good idea for you and me and everybody else?
It is physical, and you know that's it. Physical, physical, physical. I did an interview with Robert Kiyosaki recently. That's all he kept saying: physical, physical. How much physical do you have? And I think you've just said it, Craig. You've just said it. I mean, this paper market. What ultimately happens? You can play all the games in the paper market. You can shuffle between people who never take delivery and the house versus the specs, but where are the banks? Where are these? They're all long physical silver, physical gold. They are long, 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 and they're using every single price dip. And why do we know this? Because again, it's back to the EFPs, is that if you play that price too low, it translates across to a real world outside this casino where real physical is in central bank demand in all over the world. And it's like people are looking for, how do I divest my dollars? How do I divest my depreciating dollars into forests, land, gold, silver, the things that are tangible? And so you play that game too much, and you put that flywheel, spin it too much, then it translates into a physical delivery. Yes, you can spin some of it off into the ETFs, but that only really settles the COMEX guys who are, or really the funds that are really unable to in their mandate to buy any physical. So they're forced into an ETF. They want any exposure to gold and silver because they get rinsed multiple times. But ultimately, this price that is being set in the COMEX ultimately is deliverable through an EFP. And I think that's where we're seeing the difference. We're talking about, this is the legs that you're talking about coming out from under this. Every bank we speak to, and I speak to Goldman, I speak to JP Morgan, I speak to all the Swiss banks. They're all saying, oh, come on, what are you doing? Are you really, yeah, we've got physical. Yeah, we're buying physical. Yeah, of course we're buying physical. Of course we are physical, physical, physical. So, anyone that hasn't got physical, these guys, the big boys, have got physical. So what the hell is everyone else doing?
Yeah. And the example I use all the time, Andy, is the central banks. We may not like them. Especially the major Western central banks. But all you do, you scan the headlines every month, whether it's Ireland or Russia or Kazakhstan. You go down the list of all these global central banks that are adding gold. They're divesting out of their dollar reserves and moving into gold. Well, what are you and I and everybody watching us, at least in the US, you've got dollar reserves, right? You work, you spend what you need to spend. Whatever's left over is savings, and you hold it in dollar-based assets, whether that's a checking account or a mutual fund or whatever, but you have dollar reserves. And so if some of these major central bankers around the world who have a pretty good idea of what's coming and where we are, if they're moving some money every month out of their dollar reserves into physical gold, well, why wouldn't that be a good idea for you and me and everybody else? And as we go forward, like I said, this year is, Andy, we've got another election coming here in the U.S. this year. And no one's even talking about, what a disaster it was in 2020. And I know it's not a presidential election, but we're electing, all of our lower house of Congress, the House of Representatives, and a third of the Senate. And the control of that and all that money's at stake. It is going to be ugly and nasty. And, you think Antifa and all the other riots and everything that took place in 2020, that's all coming. Andy, what if, here's a risk for you. What if it is revealed as over the course of this year that all of the policies that have been pursued by governments to try to control the current health situation, what if it's revealed that all those policies have done more harm than good? And it's not just going to be in the US and UK. This would be a global thing. All the people that have been shut down and confined to their homes and lost their jobs and all this stuff due to these policies, they're going to freak out. if it's revealed that that none of this was the right way to go. And so there's just so much uncertainty out there that you could get, again, just a crisis of confidence. And, think of like Stan Druckenmiller, right? The big hedge fund guy. And they always talk, oh, Druckenmiller's into gold. No, he's not. He owns a GLD. I mean, he doesn't own jack. He can't convert shares of the GLD into gold. So what if a guy like that all of a sudden wants the real thing? And he's just one guy. I mean, what if all these different hedge funds and high net worth people and everybody else that thinks they own gold, but all they own is exposure to price? What if they suddenly want the real thing? What if Russia and China finally team up together and say, we're sick of the U.S. and their hegemonic control of the monetary system. So we're going to offer an alternative, just an alternative, for people to use. And we're going to back it, some way with some of our physical gold, just so you have confidence in using it. How would that change things? So all this stuff is out there, as the year progresses. And again, I just keep coming back to that. It's going to feel, we're down, stock market's down 10% in January. If that's not a sign of just how crazy this year might be, I'm not sure what is. Man, it's going to be something.
Yeah, and again, you've said it, and there's I think America is something that I look very close at, because what that dynamic you just discussed is massive, and there's, I think you've got half of the American population very unhappy with the situation, at least half, and the other half beginning to wake up perhaps to, hold on, was this the right policy? Was it not? I mean, and there's a lot of issues there. You have to be very careful what we talk about, because they start to pull your videos. But I think one of the things that really I get a lot of questions on, I get people phoning me every day and say, Andy, where do I put my money? I have bought gold. I have bought silver. What do I do with my money? And I say, well, first thing to do is try and get it out of the bank. It'd be better off to take even if you don't buy any more gold or silver, you should buy anything, that real estate, land, forest, etc. Yeah, I mean, we've done all that. So, but what do we do with our cash? So, well, take it out of the bank if you can and put it in a vault, but because bail-ins is the next thing. And we, it's in every single legislation. I think this is the issue that people forget. With so much going on, we forget that bail-in legislation is in every single country except Liechtenstein. But every single country in the world, there's bail-in legislation. So if you went to Switzerland right now and you try to take you say, oh, hang on a minute, all my money's in this bank. I've loaned this money to this Swiss bank, and I've got 3/4 of a basis point. Are they charging me 3/4 of a basis point to have my money in there? Why wouldn't I take it out? Well, because they won't let you. So what is that? That's a bail-in. So if you have a lot of money in a bank and you go to this bank and they'll say, well, actually, you're going to limit you to 200,000 to 300,000 Swiss francs. Well, hold on a minute. No, I want all my cash out. If I'm a hedge fund, I want all my cash. I will rather put it into a cheaper vault and store this cash for when I need it and I can utilize it. But no, you're not allowed to take it. So again, people forget that cash is an investment. So putting cash in the bank is an actual investment choice, and into an unknown where you don't even know the balance sheet of that bank. And we're talking about, an uncertain world here. And at any point, I mean, we're talking about geopolitical concerns. We're seeing safe haven physical demand come in. We're seeing safe haven paper demand coming in, but we're seeing very, very large safe haven physical demand coming in, and people looking for safe havens. Some of the choices is cash. So I'd be very, very careful if you put that cash into a bank.
Yeah, you keep the minimum amount there that you need. That you need to, whatever you use, your checking account to pay your bills, your mortgage, that kind of stuff. But you're right. The idea that, you're just going to park some massive amount of cash in a bank, just not, I mean, if you're aware of all these regulations, like you said, I mean, it's pretty clear that's just not a good idea. And again, so what are you going to do? You can't, I mean, it is foolish to put all your money in into one thing, right? I mean, we'd never want anybody to take everything they got and put it into gold, that sort of thing. So you still got to be smart. You have this. But this is a time when I just can't stress enough how important it is for people to be paying attention, because I mean, anything can happen as we go through this year. And Andy, just as an example, you talk about the stability of the financial system. What was just a week or two ago, the Russ and Pam Mertens at Wall Street on Parade were writing about all of the trillions of dollars that the major U.S. banks and global banks took from the Fed in that reverse repo crisis that they had. I guess it was repo crisis back at the end of 2019. And these banks are still massively exposed financially. Nothing has changed since 2008. Again, which is all part of why the Fed, this notion that the Fed's going to be hiking rates 7 times this year. I can't even say it without laughing, Andy. They're just not going to. But the system is still that fragile, and it is built, like you said. In the interim, over the last 10 years, every country in the world, save Liechtenstein, has written into their banking laws this bail-in stuff. Hell, remember the gal that Biden put up to be the U.S. office, to head the office of the comptroller of the currency? And she'd written this 65-page paper that was published in the Vanderbilt Law Review last year about how we're going to take all commercial bank deposits and move them to the Fed. She's already she was confident enough that that's the direction it's headed that she put that out there. So yeah, anything that, again, you can convert to physical metal and understand why you own it is very important. And again, I think that's a big part of the value of what you do and the value of what I do, because, in this world that we live in now, I shouldn't say everybody, but so many people are focused on, immediate satisfaction, immediate investment gains. Why would I want to own gold? It might go up only 20% this year, where last year I owned whatever and it went up 20% in a day. Everybody wants that immediate gratification. And so part of what you and I have to do is frankly keep people engaged and keep them educated and keep reminding them why they own gold and why they own metal through things like kinesis. Because the price, and I say this all the time, the price that you see, you reference as you've been recording, the price of COMEX gold going up $10 and back down $10. The price changes all the time, but the value only goes up because this madness continues. And I guess maybe we're as a population, people aren't taught to differentiate between value and price anymore, But there's a clear difference between value and price. And the value of my precious metal, man, it just gets more precious every single day because of all this madness. It just keeps going. So we try to, we can talk about price and, and the fluctuations and try to profit from it a little bit. But the main thing is you own physical metal. You know why you own it. You're preparing for the next generation of monetary system that's coming, or whatever it is that's coming around the bend, and try to keep track of the world around you so that you're prepared for that.